Let's bring in Peter McGuire from XM, though, for more on what we're watching at the moment. And Peter, it's a pleasure to have you on the program. I guess I want to start with these tensions, these renewed tensions. We thought trade talks, trade wars was perhaps a thing of the past. Pandemic had overshadowed that. But now we're hearing Donald Trump bring up these discussions about potential imports on China to really punish them for the coronavirus pandemic. What's been the reaction of this? What do you make of this and how it may play out for assets?
Well, good morning, Ingrid. I think it's going to be very, very tough. How it plays, that's an unknown quantity. You know, when you're thinking about what President Trump's trying to do or where he's prepared to take this, he's going to have a lot of momentum from a lot of different nations. I think Europe will probably follow suit, and maybe even the UK and possibly Australia will dovetail it. So, you know, this is going to be a global phenomenon wearing over the next couple of months. You saw our market sell off on 1st of May, which was Friday, very, very heavily. You saw the Dow down very heavily Friday night, and then oil prices as well. So this is all going to really create, I think, a great amount of tension moving forward. And I think you could see a fair bit of a correction to the downside. But
certainly we know with trade wars, it wouldn't just impact China, it'd be a huge impact on the US. It's an interesting thing to say in an election year for President Trump, or perhaps that's the catalyst.
Well, it could well be, remembering he's only about, as you know, 5 or 6 months away from that election date, and he feels as though that he's well behind. You know, Biden's gaining, I think, a little bit of a foothold. So he's probably coming out on the front foot, typical Trump style, and renew those tariffs, get them back on the table, and really create, I think, that level of uncertainty that Trump is so famous for.
All right, well, let's talk oil in a bit more detail because we've been watching that. Of course, OPEC beginning its production cuts on Friday. What sort of impact do you expect this to actually have now that it's in position?
Well, we saw a big move over the last week or so, very, very strong from those $11 and $12 back up to, say, 18 or 19 and even nearly 20 for WTI. Brent is well above that. So I feel as though there's some little bit of that wind will come out of it. We saw a big correction Friday night. Big volatility, and I think as though the way it's looking over the next matter of, say, 2 or 3 days, probably a continued sell-off. So the market's very much aware of earnings season, what's going on as far as the large consumers, and that I think the scare tactic of Trump and the tariffs are going to have a big impact to oil prices. And then you've got Friday night's non-farm, as you mentioned. So it's going to be a tough week, I think, for the oil market.
Yeah, because it's interesting because we did see prices supported, I guess, on Friday. Data showing the number of oil rigs operating in the US fell to near 4-year lows. But you're saying you think this sort of upside may be short-lived, given the holding pattern will be in now until Friday night's payrolls and a bunch of other things.
Well, I think so, Ingrid. You know, it was a very solid move last week. It was, you had days there of up 20, 25% over an 8 or 10 hour trading window. So that is probably, fairly well cooked in, and there's a little bit of profit taking to take place. And these big volatility swings, the oil market really demonstrates that, sometimes 10, 15, 20% moves over a day. So it's probably at the moment it's going to see a little bit of continued downdraft. And from a trading perspective, big moves and big volatility.
How long do you think this cap on oil prices will remain for? I mean, is it until we're through the pandemic and perhaps demand for oil begins to rise again back to normalcy or back to normal levels?
Yeah, but, when you think about that, how long is it going to take? Is it going to be 1 quarter, 2 quarters? Are we talking 3 quarters or a year? And that really is the challenge for them. I've read a couple of articles over the weekend, and some analysts are saying it could take a number of years to get back to those numbers. So there's the great challenge for the industry. We all understand from an uncertainty aspect, and oil is front and center, where it really creates that tension. And you're looking at the big producers. What are they doing with their own balance sheets? You're talking the Saudis. Their market was down 7.5% over the weekend. So, yeah, there's a lot of fear going on there from budgets and all those sort of constraints. So it's a tough, hard market at the moment to be a producer. And I think it's going to get tougher over the next quarter.
Yeah, it sure is.
And the 1st of May is the time to go away.
I know, we're going to hear that a lot, I think, because it does seem like that sell in May and go away is starting to take hold. We're only, in the second week of May. But looking, I guess, at what we're watching at the moment, also copper. Got to talk about copper because this is one of the, I guess, it's a catalyst when you see trade talks between the US and China, or I shouldn't say trade talks, but trade tension between the US and China. Copper takes a hit. That's happened. Do you expect that to last for Dr. Copper, or do you see upside from here?
I think it's going to be a lot of those base metals, especially copper, are going to get probably fairly well hit in the short run. So that's not unusual, and it's just going to be a wait and see approach. What happens as far as these Trump talks and the tariffs and what momentum it brings, and that's really going to take an effect to that market. So it's just a wait and see. I'm pretty sure that it's going to be a very tough quarter moving forward, and as far as price is concerned, probably considerably softer from here. So it's downward at the moment, Ingrid.
Okay, so what about gold?
Gold, I'd say that's probably got further upside. You look, it's back through that 1700 number, Ingrid. There's, as if this market comes off, and if we see a revisit of what we saw really in that I think it was around about November 08 to January, February 09. If you see that happen, and we just see a rerun of those sort of S&P numbers, then you're going to see gold really shoot higher from here. And there's, I would say, a fairly big chance you probably put $100 or $150 on in the short run.
I guess when you look at this risk-off sentiment we're seeing, where are you seeing the most opportunities? I mean, besides, the obvious gold, is there anywhere else where you can see opportunities in this sort of market, Peter?
Well, if you look at some of these earnings, I've just been looking at those as far as the US sector. You're looking at some of them like Nintendo, for instance. They're consoles and they're looking at hardware and software. So they've really, hit the ball out of the park. So there's many companies that are doing extraordinarily, huge business at the moment. Look at the meat sector. Look at, plant-based meat, Ingrid. Those sectors are performing incredibly well. People are changing behaviours. Then you look at other sectors that are being, smashed, hotels, airlines. So everything has its own cyclical phase. And at the moment, if you can pick the right markets, you can do very, very handsomely. Strong earnings, strong potential over the next matter of months. And it's earnings season in the States. So it's going to be a very fascinating couple of weeks ahead of us to see which are the winners and which are the losers.
And do you think earnings is acting as a catalyst for markets as it usually does?
I think in some ways it does. There's no doubting that, because you see the winners and the losers. Look at the GM sector. Look at the Ford. Look at the autos. What's happening there? Consumption. So all of those factors really hit Main Street. And what happened this Friday night is really going to be the start of, I think, a downdraft for a lot of those equity markets. How do they get re-engaged? Where are the consumers? Where are those people buying those services or products? That's the great challenge. So you can have great management, as Buffett says. You've done nothing wrong. You just were in an industry that got hit and hit hard, savaged.
Yeah, and that's for sure. And so when you look ahead, I guess, to some of the economic data points we're watching, and I know we mentioned it briefly earlier, Peter, but payrolls in the US, I mean, that'll be a big one, as we've said. But we know it's coming. I mean, how priced in is the payrolls number, despite how shocking it will be? How priced in is it?
Oh, look, that's a hard one. It might be 75, 80%, but until you actually see the read, I think then you're going to see that move. And it's very, very, look, when it hits, Ingrid, the time to talk is next Monday, and then you get an indication. If it's down 3 or 4% or 5% on the Dow, or it bounces to the upside, then you're going, well, it was obviously cooked in, but or baked in. But the reality of the matter is no one can forecast that, because these numbers could be absolutely frightening.
Yeah, exactly. It's all where it is versus expectations, isn't it? But frightening, I think it will be nonetheless. Peter McGuire, appreciate your time. Thank you very much for joining us there from XM.
Take care, Ingrid. Thank you.